Hello everyone, welcome to my YouTube channel. In today's episode, I will be showing you what supply and demand levels are and how you can trade them. If you are new to this channel, kindly subscribe and hit the notification bell so that you can be the first to see any content given out. The very first thing I'll be talking about is what are supply and demand levels. The term supply and demand levels describe regions on the chart where a currency pair price movement is likely to change course due to an imbalance between buyers and sellers in the market. When there is a significant increase in buying and selling pressure, these levels appears on the chart. When the value of the financial asset, any financial asset you're trading, maybe a currency pair or a stock market or cryptocurrency, what have you, approaches this level, once this asset approaches this level, traders frequently search for trading opportunity within this level with the hope that the value will either change the direction or stay the same. I believe we have a few knowledge of what supply and demand levels are. So let's dive into the main topic of the day, which is how to trade supply and demand levels. The very first thing to do is to know the main direction of the market. You should consider this to be the current movement on your higher time frame. Depending on the type of trader you may be, maybe a swing trader, you may be a day trader. So you have to determine the direction of the market on your higher time frame. The overall bias could be a downtrend or an uptrend market direction. Once this is established, your next decision will be based on this fact. Next thing to do is move down to your lower time frame for a possible trade setup. The main trading style I will focus on this video is the trading supply and demand levels. First, let's deal with the downtrend movement. Since you know the direction of the market and have moved down to your lower time frame, next is to locate a break of structure in line with the direction of the market that has been established on the higher time frame. You can see this break happen after the markets finish the retracement. There's always a correction or retracement after an impulsive movement. The origin of this movement is what we will focus on, since that is where the movement that broke this structure started from. At this origin, we will shift our attention to the last opposing candle in the main direction before the movement starts. In this example, this green candlestick is the core. Now, the complete height of this green candle will be noted, and this will be what we will use to define our supply level, since we are dealing with a downtrend. The next thing is to wait patiently for the price to test this supply level and react to it. There must be a reaction before you do anything. This candlestick reaction is very, very important. It is it gives some level of confidence that the level is going to hold the price. So after the close of this candlestick, wait for the next candlestick to form and close outside of this supply level for trade confirmation. So the next candle that's going to form after the close of the candlestick that tested the supply level, you have to wait for the next candle to close for it to confirm this level is going to hold the market. Giving room for confirmation puts you on the safer side of the market. That's it. Place your order at the close of the confirmation candlestick, considering setting your stop loss a little above the supply level, preferably the closest high. Also, take profit at the next visible low. Don't be too greedy. This is one thing people find themselves to be whenever they are in a profiting trade. Greediness sets in sometimes. So you shouldn't be too greedy to take your profit. The market can move in your favor or turn against you sometimes. So that is why I take my profit once a level is being respected. So let's look at another example. As we can see, the market is falling, which would have been defined from the higher time frame, because we use the higher time frame to know the direction of the market. So we can see that the market is falling from this diagram we have here, from the chart we have here. So the break of structure was spotted after the impulsive movement, immediately after the correction move ended. As I said earlier in the first example, the origin of this impulse movement is our priority. The start of this impulse movement is our priority. The last opposing candle is identified as the main player in this movement. So that last opposing candle is the main player in this movement. This candle will be defined as our supply level. Allow price to find its way. That's one thing again. We should allow price to find its way into the supply level and retest and respect it. The next candlestick will be closely watched, as this will be the determinant for our entry. Once this candle closes away from the supply level, a trade is entered in the direction of the overall market movement. Consider the nearest high above the supply level when setting your stop loss. Also put in consideration the point at which you are going to take your profit. Before I dive into the uptrend movement, kindly give this video a thumbs up, subscribe to my YouTube channel, and hit the notification bell so that you can be the first to see any new content I'm giving out. Going into the uptrend movement, all the steps carried out during the downtrend movement will be replicated here. The only difference is that the case will be reversed in terms of the market direction. Now, looking at this chart, you can clearly see that a structure has been taken out with a strong impulsive movement after the end of the corrective move. Like I said, during the downtrend movement, the origin of the impulsive movement is the main concern. Why the last opposing candle before the impulsive movement is our focus. So the height of this candlestick help define the demand level, just like in the case of the supply level too. The height of the candlestick, the opposite candlestick, help define these levels. So the next thing, and one of the most difficult thing to do, is to wait patiently for the price to reach this demand level and we have to hit. Allow the next candlestick to close outside this demand level before thinking of going into the trade, as this confirms the trade to be safe. Once you are patient enough to allow the price to close, to leave the demand level before you put in your trade, before you place your order, that means you are in the safer side of the market, and that gives you more confirmation before you pull in your trade. During this movement, when there is a clear candlestick away from the demand level, once you have this candlestick clear away from the demand level, you join the trade immediately. Now you set your stop loss below the demand level, considering the closest low. Then your take profit should be at the nearest swing high. So the same steps are applicable in this second example, as you can see from the from identifying the market's direction on the higher time frame, coming down to your lower time frame to look for possible trade setup. So the steps are just the same thing. Let me outline the major points from this video. First thing is identify the overall and recent market direction on the higher time frame. 2. Check for break of structure in the lower time frame. 3. Look into the origin of the impulsive movement responsible for the break of structure to identify the last opposing candlesticks, which will be the determinant of how to pull out your supply or demand level. Then 4, you wait patiently for the price to find its way back into this level and respect it. The last thing is to allow the candlestick to close away from this level for trade confirmation. I believe with this, I've been able to do justice to this supply and demand level and how to trade them to the best of my knowledge. So this video is mainly for educational purpose, not a financial advice. You are responsible for how you manage your fund yourself. I'm just trying to pull out educational content here for anybody that's going to see it as valuable things to use. If you find any value in this video, give it a thumbs up, subscribe to my YouTube channel, and hit the notification bell so that you'll be the first person to see any new content I'm giving out. Thanks for watching. Until the next time I bring you another valuable content. Bye.